Good morning. Well, the second coronavirus wave has reared its ugly head overnight, with the first US states to reopen from lockdown reporting a surge in hospitalisations, including Texas, Florida and Arizona. Now, that saw investors smash the risk-off button with extreme might, seeing US indices carve out their worst day of losses since the 16th of March. The S&P 500 lost 5.9%. The Dow Jones lost 6.9%, or 1,800 points. The benchmarks did, however, manage to hold onto their gain of 37% from the bear market bottom. Now, over in Europe, a bit of a similar story, massive overnight falls of about 4%. Unilever, on the other hand, the biggest producer of soap in the world, rose 0.5% after announcing it would merge its UK and Dutch structure into one single parent UK company to really future-proof the business. Now, on the commodity front, the oil price has fallen 8% on second wave concerns, falling to $36.22, while the gold price held its near 1 week high, but it lost about $5, falling to $1,735. Now, all in all, the Aussie share market is tipped to see some heavy selling today, with the futures suggesting a fall of 3%. So what to watch today? Well, keep your eye on the US futures, as the Dow Jones is already eyeing a 100-point recovery overnight. But if the futures do continue to gain momentum, you'd expect Aussie equities not to fall as hard today. However, keep an eye on cyclicals like energy, real estate and financials to be likely sold down the most today, along with airliners. That's what happened overnight, and indeed this happens in a risk-off environment. Also keep an eye on staples, which are somewhat expected to hold up in comparison. Now, over the next couple of days, you'd also expect the iron ore majors to rally up again, like Fortescue, BHP and Rio Tinto, to be upgraded, as the iron ore price has been upgraded by Citi, increasing their price target of the commodity to $7 after Brazil supply has been ground to a halt. Now to some local trading ideas. Well, firstly, it looks like investors have been lining up to buy 2 Aussie short ASX ETFs before the open, lining up to buy BEAR and BBOZ, which are likely to generate a decent return if the Aussie market does fall 3%, as the futures indicate. Now, secondly, car dealership company AP Eagers, APE, was upgraded again by Bell Potter, with new vehicle sales in June expected to surge back to the same levels as last year, given Aussies are less likely to jump on public transport and are more inclined to drive to work. Now, Bell Potter expects there to be pent-up demand in April and May, and expects a surge in sales this month and then a drop-off in July. Bell Potter reiterated AP Eagers as a buy, increasing its target to $8. Now, JP Morgan also reckons AP Eagers is worth $8 in a year. Now, thirdly, Qantas, they had their price target increased by one of the major brokers, with UBS saying the stock is worth $5.50, given that capacity is tipped to return locally to 40% of pre-COVID levels. Now, lastly, the testing laboratory business HRL, that's their ticker code as well, they're growing their suite of services, and they released stronger than expected earnings levels for the year. Now, Bell Potter maintained its buy rating of the stock, increasing HRL's price target to 15 cents, expecting 43% capital growth. I'm Jessica Amir with Bell Direct. Happy trading and stay safe.